So it's a beautiful Friday morning. It's been a good week in the markets. Things have moved well for us. We're seeing great things happen, and I'm excited to talk about it. So we're going to dive right into it. As always, guys, I want to hear your thoughts. I want to hear your questions. I want to hear your comments. Please type them in. Don't be shy. Especially anybody that's on for the first time or two or three or five or 10 or whatever. Especially anybody that's new, don't hesitate. Don't think you're the person that's asking the question that everybody else knows the answer to. I want to hear everybody's thoughts. I want to hear everybody's questions. We have no rush this morning. If anybody needs to leave because work is calling and all that stuff, go ahead. We're just going to go. We're going to make sure everything's answered. Everyone's taken care of. All the good things happen today. So let's get right down to it. All right. So, Jim, we'll talk about that New Zealand dollar. Man, that's looking great. There's just so much good stuff to talk about. Jim, we're 100% going to discuss that one. Okay. The thing we want to talk about first, though, and we're going to talk about several New Zealand pairs, Jim, because what have we been talking about for like 3 months, or probably 4 months, or maybe even 5 months? Get long everything New Zealand, right? Just be long New Zealand. Just go for it. And we're seeing such great developments there, and I'm so excited. So, yes, Jim, we'll talk about that. We're going to talk about a lot of other New Zealand pairs as well. That up there, that feels weird. There we go. So this is like the first of many charts that we'll discuss today, and I'm just so excited about this dang thing. Man, it's been great. So we've said, what did we do? When did we really dive into this chart? This was a few weeks ago, maybe 3 weeks ago, and we said this chart is the most important chart in the history of, get ready for it, technical term, ever. In the history of ever, this is the most important chart. And it has turned out to be, in fact, when we were talking about this, the dollar index was one of the first charts we posted here. Dollar index was way up here. We were way up in the 99s. And we said, we're just waiting. We're just waiting patiently, because this is coming down, as this has been hitting this kind of midpoint for the better part of a decade. As we're making this just behemoth, massive potential head and shoulders pattern here, just get ready to get massively short US dollar, right? I have been saying probably since the beginning of the year, I want to be short the US dollar. We're just looking for signs. We're just looking for reasons. Part of the reason, obviously, with the euro dollar trade. I just want to be short the dang US dollar. And this chart, last month was really just kind of the nail in the coffin. This thing was really what we needed to see play out. And it has done that in just an incredible amount. It has done such a great job playing out. We hit that high. We had a great little reversal candle here. Lots of bearish body down here. Lots of long wick, tails, shadows, stringy things, as I've heard them called. You guys would be amazed at the things I hear. And so anyway, we had this great little reversal candle up here, which was very beginning of this month, right? Very beginning of this month, October 1st. And it has just been coming down since. We had that high of 99. Oh, for some reason, oh, there we go, 99.66. And it has just been on its way, 200 pips down so far, 200 plus pips, and it's just coming down so beautifully well. So remember, the dollar index has done the same thing that the euro dollar has done, kind of literally the exact same thing. But one of those same important things has been, we needed this to hit some resistance, which it did. And we needed it to kind of, come across some good areas where it could start to turn, and it's done all that up here. But the moment of truth really is going to be kind of two-part here. We need to see the dollar index, which has struggled greatly since April of last year. So that's been about a year and a half. It has struggled greatly to get below the 200 moving average on the daily chart, right? Bump, bumpity bump. We had that little dip down below. Remember this? I remember looking at this thinking, okay, is this ready to rock and roll? Do we got this? No, we don't got this. And it continued pushing higher. So now we've got this fantastic support level down here, just below 9,600, right? 95, 85, 9,600. So that's going to be something that we'll talk about and deal with and so on. But we've got the 200 moving average. Well, I guess we don't really need that anymore. We've got the 200 moving average there. We're going to have this trend line. This has been a very significant trend line right here that has been in place for, again, going back over a year. So we've got that trend line and we've got support. So we've got serious levels we've got to get through on this dollar index. But I think the momentum that we have been looking for, hoping for the religious folks out there, praying for, it's been making its move, right? And these are going to be all the areas that we have got to clear to really get that dollar sell-off that we're hoping for. So it's been a nice sell-off here, but it's, and it's come down aggressively, but it's coming into some real solid levels. So it's going to be a little bit of a handful. And I'm very specifically bringing this up because, Jim, we're going to talk about that New Zealand dollar. We're talking about that euro dollar. We're talking about the Aussie dollar. There's other dollar pairs that are moving that I just can't care about for some reason. I've tried to look at other dollar pairs, and I don't know why they're not like registering in my brain, but New Zealand dollar, Aussie dollar, euro dollar, those are the ones to be trading right now. Those are the ones because, the euro has been just slammed for like 2 years. The Aussie dollar slammed for 2-ish years. New Zealand dollar, 2 years of downtrend. So these are all pairs that are like, okay, we've got to get in on these things because there's a massive opportunity. If I were making a YouTube video and I wanted to have clickbait, anybody know what clickbait is? I heard somebody used the term yesterday or the day before, and it was in such a funny context. Anyways, I would talk about these right here, but it wouldn't be clickbait. It would be truth. The videos would be talking about that because it's so important that we see the big picture here. We see this dollar index, how this is behaving, and we see these big turns that we have been so patient. We've been so patiently waiting for the big turns on the New Zealand pairs, Aussie pairs, Euro pairs. I mean, it's just been ridiculous. Okay, okie dokie. So we're not in the clear yet, just to make sure that we're good on this. We're not in the clear yet on dollar index, but it is making all kinds of progress in the direction we want to go. That's thing number one. Thing number two is that this is the time of year, right? We had a super high volatility October, and what are we? Are we past the halfway mark? Where are we in? What's the date today? 18th. So October's been wild, right? The stock market's been all over the place. We've seen all kinds of things happening. It's just been a crazy October, which is pretty typical, right? Octobers are where things kind of get started. And October is kind of the starting point. And I found this to be the case many times. There is all kinds of great follow through. So October, November, December, I'm anticipating, I'm hoping, I'm crossing my fingers that this year is going to be like many other years where we get kind of that October, November, December move and follow through. So I think we could be staring at some pretty decent movement over the next few months. Yes, we have elections coming up. Yes, we have Brexit deal in the works, which may or may not be approved and ready to rock and roll at the end of October. We have China, wild card. We have all these things, but the market still has to do what the market has to do, which is move. Now, it's been a painful grind for a couple of months. Definitely, August, September, those were tough. June was kind of slow, or excuse me, July was kind of slow, middle of summer typically is, and then August was just this rager. And so, we've really kind of battled the markets a little bit, but it's part of the gig. And every time we do such a thing, there's always a payoff, right? There's always a payoff to showing up every day for the markets and being consistent with what we know we should do. And so I think we're there now. I think we're at a great spot to get some movement and to get some follow through. Yes, yeah, Lars, exactly. Yep, there's going to be we've got some tough stuff happening here, so we're going to be ready for that because the EMA, the trend line, this little support zone, this is going to be a big area, and don't be disheartened by the movement, because there could very likely be this kind of a situation here where let's go yeah. So we could easily see this, get that back down to the neckline, and I won't be surprised at all to see this pull back to whatever point it decides it wants to, before seeing a bigger sell off to this area here, which is our there we go, to this bigger area, which is our really long-term trend line, right? This is our how far does this guy go back? Oh, that's not so long-term, 2011. But I'm fully anticipating this movement. So we've talked about this 1,000 times, right? We're getting this thing down into 92, 91, 92 area. So we've got a nice movement ahead of us, I think, but there's probably going to be, we're probably going to see a head and shoulders pattern here, and I'm fully anticipating, and we're going to stay the course. And I need you guys to maybe even hold me accountable to this, because sometimes it gets a little sketchy when you think, okay, the movement's not going to follow through. But this could be a very, very nice head and shoulders pattern, right? We hit this 95, 96 area, get a nice little pullback back to, 97, maybe even 98, and then the big sell-off into the low 90s, 92, 93. So there's going to be some battles. It's going to get messy and ugly. And so we have got to keep our focus on what we're trying to do here, right? What I'm going to call these right here is opportunities to get short US dollar, right? Because we don't want to be selling the dollar right here. What we want to do is we want to let it hit these crucial areas, get some bounce backs, short the dollar. Hit some crucial areas, bounce backs, short the dollar. Of course, in the form of other currency pairs. But this is the big picture that we have got to keep our eye on. So it'll be super important to watch this chart. And it's not that the dollar index itself is not going to give us 100% of everything we need. Our timing is going to come from watching these guys as well. What happened this week? Was it this week? I think it was this week. I posted a bunch of charts for the members in the chat and so on, and I said the VIX is low. We're seeing a rally in yields. We're seeing these yields go way up, and dollar index is moving a bit. And it was probably 2 hours later that we saw this massive pop on Swiss franc pairs, right? So this is going to help us with timing. This is going to make some major opportunities for us to enter. But it's going to get a little crazy, right? It's going to get a little crazy right here. It's going to get a little crazy right there. It's going to get a little crazy right there. We have got to keep the big picture in mind. I was talking to a trader yesterday, and he said, look at this 5-minute chart. I said, how about you don't? I don't care what you see on the 5-minute chart, because that's going to cause trouble, right? There's times and places for 5-minute charts. But what we need to look at specifically with these kinds of movements is we've got to look at that big picture. We've got to stay focused on that big picture, right? This is the massive, view of the forest, right? Let's not get caught up on the tree or on the leaf or on the little bug that's crawling up the tree. We've got to have this big view. And if we can keep this, then we're going to have, some very fantastic trades coming up. And I will tell you, I'm guilty. I'm definitely guilty of this, and I'll show you an example in just a moment. But let's see, some good comments here. Is the sell-off right now comparable with earlier sell-offs the last year or two? Does it tell us something? Lars, yes, I think, sometimes there's a lot of outside factors in the works, right? But sometimes the markets just have to do what they're forecasting to do, right? And by forecasting, I don't mean what somebody's saying or what the news is saying, but this dollar index, for example, has just topped out. It has just hit such major levels. I talked about in 2008 how I shorted the euro at 160, basically 159.50, right? In 2008. And I'll be honest, I was watching all the financial news. That was, 11 years ago, and I was, I have learned a lot about trading since, in the last 11 years. But when that happened, I didn't know all the outside sources. I didn't know that I didn't even, honestly, 11 years ago, I had no idea what an inverted yield curve was, and I had no idea that the U.S. had an inverted yield curve for, like 2 years, right? I didn't know that. I started seeing that banks were writing off huge mortgage debt, taking massive losses, and I heard some of that stuff, and I thought, oh, that's all pretty interesting. Hey, here's a huge double top on the euro dollar that's been going up for a couple of years. I'm going to short it. I got in, and the thing just went nuts because what happened was we had this massive move that had just burned everybody out, right? So many people were shorting the euro rally, and it just wasn't ready. And I finally saw this huge sign, and I thought, okay, it's ready. And so without knowing all the background and all the other kind of information, it just worked because the market was at a place and a time where it just needed to work. And I think there's definitely some parallels to be drawn there at what this dollar index is doing and this kind of movement that we have seen here. This low takes us back to the dollar index was hitting its lows January of last year, and we're just about to January 2020, which is crazy to say, by the way. Does anybody have any idea where the year went? I do not. Excuse me. Good grief. So anyway, this has been going up for 2 years. It's hitting all these major levels. 2 years is about as long as a trend can go, except for yen pairs. So 2 years really, really pushes it, right? If something can go for 2 years in a direction, it's at that point we're just saying, okay, all right, we're trading the reversal, right? So I think this is the opportunity. I think this one is going to have the follow through. This is going to have the move that we have been looking for and waiting for, just because if nothing else, it's just time for it. It's just time for it. Am I an authority on good timing? Not necessarily, but this has all the signs and all the signals that we're ready to go. Sorry, big explanation. Craig, still, it is in the channel. Could go to 100 before getting the head and shoulders, but this movement is strong right now. Yep. And we talked about either Monday of this week or Friday of last week. I can't remember which. I actually was looking for this to run up to give us a double top. I think I posted that in the watch list at the start of the week. I don't know, somewhere. And it could happen. It could really just screw everybody out of this whole trade, right? We could get a big drop down here and a big pullback. I'm going to go ahead and say that at this point, I think our high is in place. I'm going to say that. I'm just going to say that. Monday, I wouldn't have said that. Last Friday, I wouldn't have said that. But I think our high is 99.66. I think it's in. I think we've got that high in place. And one of the reasons that I think that is, number one, the pretty drastic movement that we've had downward. And number two, I think the high is in place on the dollar index because it didn't hit the 100 level and it didn't boost above the 100 level. Over the last couple of weeks, I've been predicting that this is either going to, turn just before, or more likely, it's going to go just beyond, right? That this is going to go just beyond the 100 level, enough to stop out and scare out and freak out all the dollar shorts, right? I was actually looking for this to go up to maybe 100.10 or 20 or somewhere in there, just enough to say, okay, we'll kill all the shorts on the dollar and then have it make a big drop, right? And so this is very much in line with that same thing, which is everyone's looking for this exact level, and it just misses the exact level, or it just overshoots the exact level. And in this case, it just missed it, and it had a big turn. So I think there was a lot of shorts that were ready on this that missed it because it didn't quite get there. And of course, we're already short the dollar, so it was just, welcome news for us. But yeah, I don't know. I think our 99.66 is the level for us. I think it's the level. Euro dollar, when it starts trending, is it a pair which can leave pivots for a long time? So Lars, yes, the euro dollar basically will spend 90% of the year doing absolutely nothing. And then when the euro dollar trends, it trends aggressively. And we're going to talk about the euro dollar because I know exactly what you're talking about here. it trends aggressively. Now, it doesn't mean that it will leave missed pivots and market imbalances, but it's an aggressive trender. I remember trading a scanner setup on the euro dollar a couple of years ago. This was, pre-scanner group. And I remember we had this like 500 bar count on the euro dollar 1 hour chart. And I was just like, good grief, is this thing going to turn around? And it just went and went and went and went. And so, we do see the euro dollar make some really aggressive moves. They're just very few and far between. So, but yes, we're going to talk about that and what I think will happen there. And remember this stuff right here on the dollar index, right? We're hitting significant areas. So with things like euro dollar, Aussie dollar that are leaving imbalances, these are going to be the spots to get short the dollar against euro, Aussie, New Zealand right here. These are going to be our spots that are going to cause some pullback and hopefully get those pairs, retesting some market imbalances, retesting some missed pivots and some of that stuff. Yeah, I really do think so. I think this is the time to stay on board. We don't want to jump off and have the train leave the station without us, kind of a thing. We've had a pretty big uphill battle shorting the dollar, and now this is the payoff, right? So we want to stay on board for sure. Craig, yes, this move is drastic enough, and agreed. It will likely pull back to the 98s. Yep. Okay, so dollar index is super interesting. That's number one. Sorry, guys, if I'm nerding out too much here, but these are so important. These are just things that we have got to know about because this week the market moved a bit. By the way, does my voice sound funny? Somebody, my wife called me yesterday and she said, "Do you have a cold?" And I don't think I do. I think I feel fine. But and then somebody else, I called a client of mine on the phone and he didn't recognize me. So I don't know if I'm sounding weird, but anyway, I feel like my voice is seeming a little weird right now. But anyway, these are we've got to go strong here. We've got to go strong. So helium in the Utah atmosphere. I wouldn't be surprised. I'm telling you, something's going on here. Whenever I'm in Utah, and I believe the elevation here is like, I don't know, like 11,000 feet or something. It's massive. So we're in Park City area, and it's just we're high up. But yeah, I feel like when I stand up, I get lightheaded here, like a lot. California, I don't. Sea level, I think, is better for me. But oh man, my wife's really liking the countryside, small townness with a little bit of city living, and I'm not sold. We'll just say. I mean, I'm sold on this house because I bought it, but I'm not sold on too much other stuff. But so far so good. Okay. Anyway, tangent. Okay, so dollar index chart, important. VIX chart, importante. Remember to get the movement going and to keep the movement going. I don't think we're going to get a massive reversal if the VIX shoots back up, right? If we get the VIX going like these, right? And it goes back up again, which I am just sure it will, count on that happening. Might be short-lived, but it's going to happen a few more times this year. I think that's going to slow down the dollar rally because right now the dollar is finally releasing. It's saying, because remember in 2008, the market, the dollar went totally bananas, right? Here's just bear with me for a moment because this is important. What we had, here's 2008. Okay. Where is 2000? Why that just doesn't look extreme enough, but I guess it is. So we had this huge move, right? Where in a pretty short period of time, and of course it's a lot more aggressive looking on the euro dollar chart, but we had that big hold on. Well, anyway, we had the big dollar rally in 2008, right? Because everybody said, eek, it's panic time. let's pull our money out of the stock market. And when it comes out of the stock market, it's got to go into somewhere, right? So people start buying, they start buying treasuries and bonds and so on. And so we see that whole thing happen. We've seen a very broken different correlation. When the stock market's panicked, the dollar doesn't necessarily rally, but it also kind of just makes it stuck a little bit. Now, we've had this really weird, the last little bit, the stock market has been kind of grinding higher, right? Things are kind of just still staying up. And we've had the dollar kind of grinding higher, right? They've kind of both been going up together. And so the correlation's obviously a little messed up. But for those of you that, we're used to trading, if stocks are up, the dollar's down. If stocks are down, the dollar's up. Same with the VIX. If the VIX is down, stocks are up and the dollar is down, right? That's not necessarily the case. But if we do see a big, strong VIX movement higher for anything, I don't think it's going to reverse and give us dollar strength again, but I think it will slow down that dollar weakness sell-off that we're hoping for. Because investors, the overall, this is where we have to be open to what's going on in the stock market, right? We're currency traders, we're looking at currency trades, but the stock market represents a lot of just investor appetite and sentiment and market sentiment, right? And so we've got to know what's going on here. I trade stocks, I trade options, I trade everything. In fact, I've got options trades going right this moment. I own tons of stock in all kinds of different things, and I trade it all very actively. But we've had this kind of broken correlation that's made things a little difficult. And so, the dollar is behaving a little bit more oddly in relation to all of those, but we do need to know, when things get panicked over here, obviously we're going to be looking at Swiss franc and we're going to be looking at yen. The yen's really closely tied to the stock market, and the Swiss franc is just closely tied to, are we scared? Are we not scared? Right? And so we need to keep an eye on those. And the dollar index is going to give us a lot on that. The VIX is going to give us a lot on that. And our yield, our treasury yields are going to give us a lot on that, right? And so, it's been a little bit interesting to see, we've seen the VIX low, and then we've seen 30-year yields still going lower. That's not a situation where we're going to see, a lot of real good stock market movement, right? Because it's been very split, right? A lot of people are in the stock market, but then a lot of people are not in the stock market, even though it's been going higher and it's been doing all these things. And so it's been a tough market to trade. Stocks, currencies, all that it's been tough to trade this year because all the typical signs that we look for have not been there. We've had to look for new and different signs. And so, that's why we've really, in past years, I haven't brought up in live sessions so much, looking at the VIX and looking at yields and so on. And we've looked at those every day and every week and every month, basically for the last several months, because they're really telling of what the market is overall up to. So as we see 30-year yields coming up, right, this is now saying, hey, the demand's not so much there. We're going to have to start giving out a little bit more money for people to buy these safe investments, because they're saying, maybe it's okay to get back in the stock market, and maybe it's okay to get out of the boring, slow US dollar kind of related stuff. We're going to move a little bit from ultra safety into a little tiny bit more risk, right? And so that's where we're talking about this risk on trade. And so the 30-year yields, the 10-year yields, everything's been going up, and we're starting to see these short-term yields, 2 years up a little bit, 3-year nicely down, right? Everybody's saying, okay, guess what? This is what we want to have happen, right? We want to have the short-term yields much lower than the long-term. And that's what an inverted yield curve is where the short-term yields are higher than the long-term. Right now, we're at a point where basically the 30-year yields are twice what the short-term 3-month yields are. So now the market's turning, and now everyone's saying, maybe we're not so worried. Maybe things are kind of okay. Stock market's at an interesting spot, and we're going to be, battling the S&P as it makes its way up through these levels. The S&P needs to either have a really aggressive breakout and make a real strong push above 300, or the SPY here specifically, or we're going to kind of have this stuff happen again, right? And it's going to mean tough trading's not over, but at least we know what to expect, right? So if we see that kind of stuff continuing to happen, and this can't really just blast through 300, 305, then, volatility will continue to spike, and we'll just continue to ride Swiss franc and ride yen and ride dollar and just kind of let the grind play out. But I can't say how confident I feel that we are in the right direction of everything. But we're looking at these charts and we're not, there will be none of this, never saw that coming, never saw that coming, right? We're going to, there's going to be some times, guys, and this is why we scale into positions. This is why we manage our risk, because there's going to be some times where we're going to be like, were we just super wrong about something? Because this stuff doesn't come without pain. There's a reason why a massive majority of traders do not consistently and successfully make money, because you have to hold on through some stuff. We have held on through some stuff, right? We have held on through the market, having drawdown on our Aussie Swiss and drawdown on our Euro dollar. We've bit the bullet on that, but we've said, this is right. We're doing the right thing. And it's painful and it's uncomfortable, but we're doing the right thing because the big picture is telling us that. It's not rocket science, anybody can figure out what I'm talking about here, but it's just being able to see it succinctly and stick to it. Make that plan and stick to it, because it's hard to sit through some of these trades and to sit through some of this movement thinking, why am I doing this? I'm an idiot. But if we know the big picture, like we do, that's how and why we have set through some of our trades, because we know the big picture. We're right. We are right about what we're doing. And that's a hard assessment to make sometimes, but we are on the right track. Lars, is a chicken like to stay away from yen while we operate on ATH on stocks? Oh, at the high. Sorry. Yeah. So the yen will have a purpose, Lars. The yen will have a major purpose, and we'll talk about that because this is and of course, as we've talked about many times, the Swiss franc is the market panicked or not? Regardless of what stocks are doing, is the market panicked? The yen is the one that really moves with the stocks, right? If we see big movement down, in the S&P, we're going to see the yen moving big time, right? But yes, this is probably not a massively excellent time to trade to trade the yen too short term, right? Because we're at this spot right here that I would say there's a big decision for stocks to make. Full disclosure, guys, full disclosure. I don't think the bumpy roads are over, but I'm super bullish stocks. I'm bullish every dip I get. Every time a stock I'm looking at, the market in general dips, I'm buying it. Not because I'm old school. As you guys know, I do not discriminate between long and short. Whatever the setup is, I'm going for it. But I can't see a scenario where stocks don't head higher. Stocks will move higher, but it's going to be a mess. It's been a mess, right? That's been a mess. And so that makes yen pairs tricky to trade, because there's a lot of, and Swiss franc as well, but Swiss franc's a lot less volatile than the yen. The yen will move a ton. The Swiss franc doesn't move as much. And so stocks are going to struggle to get higher here, but as they do get higher, we're going to see that yen weakness. We're going to see it, saying, okay. And we've seen a lot of yen weakness this week, right? Because stocks have made this fantastic comeback. And, the S&P here takes us all the way back to the beginning of the year, hitting 200 moving average, machine gunning 200 moving average. What do we have again here? 200 moving average, and this is heading higher. So again, busting above 300, 305 here is going to ignite yen trades, but it'll be a bumpy road. We're going to talk about some yen trades there. So yes, you're right to stay careful on yen pairs, but I think we have a real opportunity to trade yen pairs, and we've got a real opportunity to trade Swiss franc pairs. I think the market is really turning that corner to confidence and to rocking and rolling this whole thing higher. So, and remember, if, technically speaking, from the recent lows, if you look at, the SPY, it's up a ton, right? It's up a ton from these recent lows. Like, I mean, not a ton, but that low of last year, December, 26th, when everybody was like, hey, let's take a Christmas break. It's up, almost 30%. That's a pretty intense move. But then this stuff has been all garbage. And I think this is the consolidation for a massive rally higher. So Swiss franc, major opportunity. Yen, major opportunity. I really think all the pairs are major opportunities right now. We've just suffered through a lot of patience and a lot of sideways activity, and now it's time to get these going. Okay, so remember, guys, we're going to use, and I have to put this disclaimer out there a little bit, we'll use the Monday webinars to really say, here's what we're trading this week. But I really want to make sure that we understand the picture, right? And we're going to talk about a lot of charts, but we've got to understand the context of all of this. Be honest with me, guys. Tell me, is this making sense? Does anybody just flat out disagree with me? Does this look like what we have going on here? Is everybody with me on this whole thing? Are you there? Are you there on what we're talking about? Is it coming through okay? I look at these charts all day, every day, and sometimes it just kind of sinks into my brain and it doesn't come out my mouth so clearly. So I want to make sure, what we have just discussed on the VIX, the dollar index, yields, stocks, is so important for what is going to happen on currency pairs. It's going to happen, right? We have just amazingness coming. So good. Okay. And if it doesn't make sense to anybody, please let me know. If something is unclear, please let me know, because this is the stuff that we've got to be on board with. So good, Corey. Stoked, baby. I love it. So good, James. Good. And James, you're exactly right. This is the stuff, the average everyday trader goes out there and says, I'm going to look at a 5-minute chart and I see that there's 3 green candles. I should be long. And sometimes trading is just that simple, but 90% of the time it's not, right? I'll be honest. I read a lot of headlines. I read a lot of headlines mostly, right? If I go to my kind of, go-to financial websites, Mick Mulvaney, right? Trump's ceasefire. I'll be honest, I don't know what's going on in Syria. I don't know what's going on with the impeachment. I don't know what's going on with the U.S. elections. I don't care. I don't care, because my news is this right here. This is my news. This is my news. This is my news, right? So these are the things that I need to know. Now, I can't be totally oblivious to the news, and I've got to know that China still has some things going on, right? And that's going to add volatility. And so that's going to make me more sensitive to the big levels that we're coming up to, right? And Brexit. I need to know what's going on with Brexit. But honestly, I don't know all the details with Brexit. And I've kind of written off the pound pairs for now. But I know that I think there's an agreement. I think we've got some October 31st things happening. So news, we need to know the basics. We need to know something is happening. But the details of those basics, as far as the news itself goes, I don't think are important, because the details we're going to extrapolate from these charts here. So this is the stuff that we've got to know in relation to what the actual news event is. And then we can start to formulate a picture of, okay, here we go. And this is why, guys, it's important to be in a trade group, right? Because sometimes these things, if nothing else, I am a creature of habit. And what is my habit? To get up every morning, long before it gets light outside, and dig through charts, and to dig through charts all day, and to dig through charts before I go to bed, and to make sure that I understand what's going on in all the different places so that we can stay on track. And then I end up finding some amount of comfort in that chart digging, right? So you guys get a ride on that, because I know most of you are going to say either I don't want to do this, or it doesn't totally make sense, or it's a little overwhelming, or any of that stuff. And that's great. That's why you're in the group. And that's why we'll keep you on track and make sure that you get, all this stuff here. Remember, trading comes with some black eyes. I told you guys that one of my neighbors out here who works for a hedge fund, and he was personally responsible for, a pretty decent amount of money, tens of millions. In August, they laid him off. They didn't fire him. They just said, you're welcome to keep working for us, but we're not paying you anymore. We've taken such a hit in August that we're just not, you know, July and August were bad for those guys. And they just said, look, we're laying off half of our staff because, you know, it's not, and August was terrible. There were hedge funds that lost. There was one like $4 billion hedge fund, which isn't that big, lost $1 billion in August, right? 25% of their whole amount. So, you know, we had these tough months. We had August was kind of just gnarly, but we stayed the course because we knew what the big picture was, and that's what keeps us on board. So I hear people say, "Oh, I'm tired of looking at a trade in drawdown and so on." I don't like trades in drawdown either, but I don't mind them because as long as I know what's happening, then the big things will play out. So, you know, as we've talked about many times, we're going to make 80% of our money in probably 20% of the time. And the rest of it, we're just showing up. We're just showing up. Yes, yes, yeah, yeah. Good, Bob. Learning is good. Yeah, Mel. Drawdown, you know, and this is why we've got to manage our risk, guys. This is why we've got to, you know, keep our scale in positions and all that going because, you know, we're going to have moments where we say, I know what the big picture is, and we're right about the big picture. We just might not be right just yet. So it's kind of like marriage, right? You know, I'm right about the things that that I'm standing strong on in marriage, but sometimes I'm not right at that moment. So I have to have to be wrong for a few minutes, you know. So it's, you know, it's the same thing in trading. We just have to say, all right, let's go out to the long term and let's stay on track with that and not get mixed up in, you know, in the choppiness. Okay, so those charts, I wanted to spend some time on them. Again, let's go back to this one for a moment, and we're gonna show how this plays out on some of the other dollar pairs, right? So dollar index hitting 200 moving average, hitting this big rising trend line, big support down here. How is that going to help us on like the euro dollar, for example? Euro dollar is coming up to some resistance. It's making its it's making its run into resistance here, where we're gonna, you know, we're you can see that price right there. Let me move that over just a little bit there. Excuse me. You see this 200 moving average, right, at 11200. That's where our 200 moving average is, and that is basically where our trend line is. So what do we think is going to happen at 11200? It's probably safe to say that this euro dollar is going to do this kind of stuff, right? It's going to go, okay, let's come back down a little bit. And, you know, we might get a big pullback, but I doubt it. I don't think that's going to happen. I think the market is ready to make a decision, get to a decision point, pull back. I'm 100% looking for that kind of movement, but it's not going to come without a fight. The euro dollar, just like that dollar index chart, has massively struggled with that 200 moving average. So there's going to be, you know, expect, and it's probably not going to be bump, you know, hits on a Monday, pulls back on a Tuesday, breaks out on a Wednesday, makes a big movement like that. It's probably going to be hits on a Monday, Tuesday, Wednesday, Thursday, Friday, next week pulls back, the week after breaks out. I mean, it's probably going to be a little bit of an ugly movement, but as long as we understand that and we know what the other charts are telling us, we're going to be okay with that, right? And so this is where I think that we're going to have opportunities on our euro dollar longs that we already have that are kind of positioned in this area up here, right? This is where we're going to say, okay, we're looking for that to happen, but we want to use the smaller time frames to give us that pullback, and this may need to run another 50 pips higher. We might need to get this up to 1200 excuse me, before it starts to pull back enough. Now, we don't really have too many market imbalances. This was a market imbalance right here on the euro dollar, one we talked about at the early part of this week, I think. 109.95 and 109.65. It hit 109.95 perfectly and just busted up, you know, just went up there 150 pips, which was awesome. We have this little lurking market imbalance down here at 109.65. I think that might be out of range now. It might not be, but I think it might be too far away, right? So I'm kind of over that one for the moment, but I'm watching it. But at the very least, I think we have opportunity to get back to these guys at the very least. And especially if this pushes higher, and if we leave 3 consecutive missed daily pivot points right here, then we're definitely going to start looking at, you know, some big pullback opportunities, right? Excuse me. So, you know, we've got 2 pivots here. If that leaves a 3rd pivot, then, you know, the euro dollar is going to sell off to some degree. But either way, it's going to have to sell off a little bit. It's been pretty aggressive. So I'm, you know, I would say at this point, I think that you know, 110, 50, 60 is probably going to be a pretty decent little spot to come back to. You can see we've just got a nice little, you know, that nice little high right there makes for, you know, nice little resistance level right around that daily pivot, you know, kind of a nice little support zone. 110, excuse me, 110, 50, 60 looks like a great spot. So if this does run up to 112, you know, that should be a good area to kind of look for the next, you know, big leg higher, right? This market's not going to go without any, it's not going to run and just, you know, give us this straight movement up. It's going to mix everybody up. It's going to be an emotional roller coaster. There's going to be, you know, crying and screaming and so on. It's going to be a bit of a messy move, but we're going to get there. I think we're going to get there. And I think it's time, excuse me, for the euro dollar to get out of this dang channel. But we'll know 112 is going to be very telling, and we expect 112 to pull back as much as anything. But as we watch 112, we're going to be seeing at the same time what the dollar index does over here, right? And how the dollar index plays out. Excuse me, how the dollar index plays out with this, you know, 200 moving average and this big long-term rising trend line, right? That's even before we get to this, you know, big support zone. So euro dollar, we're going to have possibly a couple of missed pivots. We're going to have, you know, 3 specifically speaking, and we're just going to be patient. We're going to get some pullbacks, and we're going to have some nice opportunities there. Yeah, Corey, that's I love it. I love it. We've had patience in drawdown. Now we need to have the same patience in profit. Exactly right. It's easy to say, oh, I'm going to sit through a trade. It's hundreds of pips down. And then, you know, we're 11 pips in profit. Take it. Get out. Take it. So, yes, we've got to hang in there. We've got to let this thing play out. Because in the end, what have I said, guys? I think my 2 most common sayings here are, number 1, markets just go up and down, and they've been going down for a while. It's time to go up. And number 2, we're going to hit some of these bigger, longer upper targets. It's just whether or not we're on board with that or not. So that's what we got to do. Yeah, Lars. Yep. Yeah, we could have a scanner trade coming there for sure. So, yes. Okay, so that's our euro dollar kind of setup, and that's where I think things are interesting. New Zealand dollar, yeehaw, same kind of thing. What have I said for weeks now? The New Zealand dollar looks so interesting, so wonderful, so fantastic at 10-year support at, you know, this takes us all the way back, straight back to 2008, and it's just hit this level so much, such a great little area. Bottom of the falling wedge. Now, New Zealand dollar has been like the last to take off and start to move for us. It's really been a struggler, right? New Zealand dollar, you know, topped out these big levels back here up at 74, and then it has just been coming down basically since the first part of you know, 2018, January, February. It's been coming down. Oh, are we coming back? Nope. Coming down. Are we coming back? You know, and so it's been a real roller coaster, but this is the turning point I think we need to be watching for. So I love this weekly chart on New Zealand dollar, right? Inverted hammer, real nice long bullish candle, big, what's this guy called? Somebody help me out here. What's the one where you got that long body and morning star or something? I don't know, someone, I forget, but it doesn't matter. This is a super bullish candle right here on the weekly chart. All body, all wick down here. this thing is making a big push. So now what we have here is, as we've had these bottoming out patterns on this New Zealand dollar, it is go time. This thing is ready to be just jumped into head first. So, you know, again, same kind of situation as euro dollar. We've got, you know, kind of this market imbalance situation, 63.50-ish area, obviously not too far away. We've got a pretty intense market imbalance down here at about 6,300. Right here, we've got a missed daily pivot. So, I think that this New Zealand dollar is ready to rock and roll. We're gonna talk about this more on Monday. I want to get into everything New Zealand dollar long, just like 100%. But specifically, the New Zealand dollar, US dollar, I think we've got, you know, very possibly a pullback to 6,300. We may not get all the way there, I'll be honest. But I think that's what I would like to see. And if we do, that's the spot to start buying. But I'm going to be looking at this very closely at about 63.25 to kind of, you know, to that little area. This will be a short-term easy target that I'm sure will probably get hit today, 63.50, 55 area. But, you know, once we get into the lower 6,300s, that's where we should be buying New Zealand dollar. And just getting along and just riding this thing. You know, I think that on the low end, you know, if we can get in at 6,300, I think on the very lowest end, we can get to this market imbalance at 65. I think that's like a minimal target. But, you know, I'm not looking for the New Zealand dollar to really even super break out of this rising or this falling wedge at this point. It will at some point, but if we can trade this up to 6,500 and ultimately into kind of that market imbalance and some of those missed pivots between 66.25 and 66, you know, 75.80, that's a great trade, right? If we just get it from 63-ish to 65-ish, that's 200 pips. But I think we can get this thing up into 66, you know, 67. We could make, you know, probably 400 pips on this trade. So I really like New Zealand dollar. And then, of course, going down to the Aussie dollar, I like that whole situation as well. I think Aussie dollar is just majorly ready for a huge move. So we've got a lot of good things going on here. This is actually a scanner trade as well, but it's, you know, it goes very nicely in line with the rest of our dollar movements, right? Where, you know, bottoms are holding, lows are holding, supports holding. We're getting some of these crazy bullish candles. I want to be long just everything, you know, or basically short everything dollar, but specifically these three: euro dollar, New Zealand dollar, Aussie dollar. And this bottoming out here has been just top notch. So, you know, again, and this, you know, New Zealand dollar has been, or excuse me, Australian dollar has been coming down since January 2018. We're creeping up on 2 years of downtrend, and we're hitting, you know, some pretty big support, and we're starting to see some good signs of turning. This is the stuff that we want to trade. So I want to be long everything Aussie. I want to be long everything New Zealand. And I'll tell you really quick here. This is where I chickened out a little bit this week. I said we shorted the Euro New Zealand, right? And we closed it out with, you know, a small profit, 40 pips. Shorted Euro New Zealand. I said, I want to get back into this thing at higher prices, right? And the Euro New Zealand ran up, and I saw everything so bullish on Euro pairs, and I thought, I don't want to get into this thing. I don't want to get into this. And so I saw the Euro New Zealand run higher, and as it did, as Euro New Zealand kind of ran up there, I thought, this might head up into 179. And it ran up, you know, to about 177, you know, definitely a good solid 100 pips higher than I thought it should go or would go. And so we stayed out of it. But I'm bullish Euro pairs, or Euro, but I'm also very bullish New Zealand. And I think the Euro New Zealand is going to be a great opportunity. So we'll talk more about this on Monday. But, you know, this kind of looks like a bit of a bull flag. I mean, this looks pretty bull flaggy. And so that was another reason I thought, just in case that is a bull flag, and just in case this thing does want to run higher, we'll go for it. But it held the level. It pushed up a little bit, held, and it's coming back down. So I'm still kind of looking at this one going higher before we short it and kind of take that position there. But we did throw a trade on. We have a pending order on Euro Aussie, right? So 163.70, and it's a whole 100 pips away from that, but that's okay. This is a pretty volatile pair. This one ran up a good little chunk, and it hit the level that we had talked about, the weekly pivot. It hit it to the pip, basically. That weekly pivot was back there at 164.30, and it made its way back down. But I think this is going to be a great opportunity to, we're hitting some support. Let's get this thing back up towards this market imbalance up here, and then just let it sell off, and we'll ride it down and make the bucks. So we're going to talk on Monday about a lot of these different setups, but I wanted to kind of just make sure we were clear on what we should be doing what happened this week and what we should be doing next week, right? And we'll talk about a whole bunch of specific trades themselves next week, but I wanted to make sure you guys were just clear on how the market is lining up and how it's playing out. And I think we've got some real good things in the works. Okay. I think my voice is just done all it can do. Questions, comments. We've got time. There's no rush. Do you guys feel okay about everything? Is everybody ready to just attack next week? It was really nice to see some good developments in the market. It's nice to see that we have some very important, interesting areas that we can be ready for some unexpected volatility and some unexpected stuff that will surprise everybody else but not us. So these are all good things. These are all good things. Good, James. Good. Yeah, the rest of the year, I think we're going to have, the rest of October, November, December are going to be some really, really good months for us. So super excited about that. Good, good. Any other questions, guys? Any other comments, thoughts, anything else? Anything else? If not, we'll leave it at that for the morning. But I'm really excited about these charts. So Monday we're going to talk about we've got pending orders coming on New Zealand Swiss. We've got pending orders coming on Aussie Swiss. We've got pending orders coming on a couple of other Aussie pairs. We're just gonna go nuts. So I hope you guys are ready. Call the bank, put more money in your trading account if you need to hold 10 trades open, because there's too many things to choose from. I'm not going to be able to narrow it down. So I just want to trade everything, get into everything. Okay. That's it. That's it. Jim, yes. For all Scanner members, there is a Scanner webinar tomorrow morning. So, yeah. Good, Corey. Yeah, there have been plenty of moments that I haven't been excited over the last month or two, but I am very excited. So we have some really, really good stuff. So yes, we should all be super excited. There's really, really great things coming. Okay, you guys, thank you. Many thanks. Good to see everybody. Have a wonderful weekend and a great rest of your day. And we'll see you guys back here Monday morning, bright and early. Thanks, everybody. Take care, guys. Looking forward to seeing you all. Have a great weekend, guys. See ya.